Hi, this is Roman Sinclair. I am the owner behind Sinclair Realty Group, an investment sales brokerage focused on the sale of buildings in New York City, um, focused mostly on 1 to 20 million range, with a little bit of an emphasis on multifamily. I also write Roman Sinclair New York Multifamily Newsletter, which is a publication that comes out, bi-weekly, where I do deep dives on what's happening in the markets of New York City real estate. Again, an emphasis on multifamily. That's hard to read elsewhere, not accessible. And so that's my background. Many of you guys maybe read this stuff already or have spoken to me on the phone. Today, I wanted to do a predictions session for 2026. um, Professor Scott Galloway is a entrepreneur and investor. Um, he does this for more general business. I'm applying that to real estate. He does a very cool segment on it. I highly recommend. It's really insightful. So this is partially thanks to him. So today we'll go over some predictions I have for you guys for 2026, all focused squarely on the New York City market. Um, and you guys can tell me, do you agree? Do you disagree? Where did I get right? What did I get wrong? And I'm going to try and do it in under 15 minutes. To kick it off, we're going to look at the last year's predictions. So last year's predictions are here. This is kind of how I rated myself. Um, Starting with the first one in 2025, we predicted that companies would return to office 5 days a week. Did that happen? Um, Not quite. It didn't really happen. A lot of companies changed their return to office policies. A lot of companies are in the office more than they were before. Amazon is a big one. Um, Google updated its policy. Starbucks, a few financial firms. These are big name employers, AT&T as well. So there were some big shifts. However, a full 5 day a week policy is not something we saw. JP Morgan was more the exception rather than the rule to that. Although the return to office trend does keep growing. Second prediction was more sales volume in 2025, commercial real estate in New York versus 2024. That's TBD at this time. We don't have the numbers entirely tabulated, though, based off of trading activity, sales activity from Q1 and Q3 of 2025, it does look like this will be correct, just to be determined once the data comes out. Third, we predicted that there'd be more portfolio sales in 2025 for rent stabilized properties rather than single asset sales. So, looking at volume in theory, the idea is like, okay, we'll see many more buildings, we'll see many more of the volume attributed to single big ticket transactions than, 1,000 smaller transactions. This is wrong. Um, there are a lot of big transactions that did transpire. PH Realty bought a portfolio for 192 million from the related companies, largely in the Bronx. This was a big, big transaction. PIMCO sold a loan portfolio in the Bronx at a heavy discount. It was a cluster of properties. And now, probably most topically, we see Summit Properties is offering 451 million for a 93 building portfolio comprising about 5,100 units. The Joel Wiener Pinnacle Realty portfolio. So these portfolio transactions are out there, um, but the math says otherwise. There are many more transactions involving one or more rent stabilized unit in a building that are happening at single asset level. So for small investors or for folks who don't want to take on an entire portfolio, there's still plenty of opportunities. And for sellers who are trying to decide how to address the market with their portfolios, there are different approaches that still exist. So that one, I gave myself a yes and no because there were some portfolio sales and we did see that, but it didn't really work for the math. More development in R5 zoned areas. Yes, this certainly happened. City of Yes is going to make a lot more development start happening in corridors that were not so highly zoned by inserting these clever bonuses, such as higher FAR for shorter streets, and the ability to have deeper rear yards and lesser requirements for side yards. All these things help a lot, as well as a plain Jane FAR bump for all R5 districts. Finally, I said there'd be hotel to residential conversions taking place as a business plan. This is a resounding no. Not at all. Didn't happen. Hochul put out a report, Governor Hochul, that one of these did take place. So I was wrong there. So that's 2025. Those are the predictions. Now on to our predictions for this year. What will happen in New York City commercial real estate this year? Number one, Mamdani will fail to secure a rent freeze. Mamdani has built his platform on making sure that housing is a priority in his agenda. That has been a big part of his platform. He has made that clear by passing a flurry of executive orders and also doing some symbolic gestures like visiting a rent stabilized tenant in one of the Pinnacle Realty portfolios. I think this is a way of saying housing is very, very important. I'm going to do everything that I can to support tenants and to highlight the importance of housing as a human right. However, I don't think he's going to be able to get a rent freeze done. The nuances for doing that are tricky. The Rent Guidelines Board decides on how the rent increases are sort of decided on, adjudicated, and Mayor Adams has made that difficult for Mamdani by appointing and reappointing some members. But more than that, the fundamentals of business have to, play a really important role. And I think there is enough evidence out there in the world right now where people understand, well, if you have a business with capped revenues, uncapped expenses, um, and capital expenditures that are required to repair and fix damages that happen, well, ultimately, those businesses fail. It's very hard to support that. And this is for any business, not just real estate. And there's just lots of bodies of evidence. I'm going to point here as well as here and here from different stakeholders that are saying this. So I think a rent freeze probably won't happen. Number two, residential rents reach all-time highs. This is um, this is to say that people who are concerned about how rent is growing, they're correct. People who think rent is going to slow down because how high can it get, those people are wrong. Rents in New York will keep going for the moon. Miller Samuels, the appraisers that do research for Douglas Elliman, they put out a report in November 2025 saying median rent has been the first, second, or third highest on record for 10 of the past 11 months in 2025. Well, I predict in 2026, median rents in Manhattan will exceed $5,000 from 4750 where they are today. And in Brooklyn, they'll exceed $4,000 from $3,800 at the median rent level where they are today, representing 5% yearly increases from November 25 across both boroughs, and 18% increase in Manhattan from 2024 November, and 14% increase from Brooklyn in 2024. Why? I think the explanation here is simple. We had a tax abatement that expired in 2022. There was almost no development happening until the new tax abatement came into effect in 2024 spring. And that has put a stagnant housing production market and even more stagnancy. The development pipeline for New York City in the last um, 60 years has been abysmal compared to the first half of the 20th century. And that's just continuing. And so when tax abatements that fuel 70% of housing development in New York City, this according to NYU Furman Center, when you repeal those, uh, development falls to the wayside, and when development doesn't happen, supply flatlines, which is really really challenging when demand just keeps surging because of how great New York City is. So rents will break all records next year, or this year rather, in 2026. And that's because vacancies at 1.4% and rent and demand for New York is very high. Number two, I think there'll be more office developments than residential conversions from office buildings. And I think that the story of the day is around office to residential conversions because it's exciting, it's cheaper in some senses than building from the ground up, and it solves the issue of a lot of B and C office buildings from absolutely dying on the doctor's table. Some of the B and C office buildings, according to the New York City Comptroller's report, have lost 43 million square feet of tenants since 2019. That report was in March of 2025, so I can only imagine that number's grown since. Um, this is overhyped. We are solving a problem. Uh, we are trying to apply a solution uh, where there is no problem. Office buildings that are bad should lose value, and that's tough, but there's not always going to be a case for converting them. Yes, City of Yes made it easier to convert buildings by changing the zoning law and removing restrictions on which properties could be converted. And yes, the Midtown South rezoning is going to lead to further office to residential conversions. That's true by changing to residential district, but still, it's just hype. And when you look at what's going on, you have Penn 15, Vornado's office building. It's poised to deliver 2.2 million square feet of office space. 350 Park, 70 Hudson Yards, 175 Park Avenue, 343 Madison Avenue, and even JP Morgan's recently delivered 270 Park Ave. Um, there's 11 million square feet of office buildings that are in development or soon to be in development or even completed. So uh, I think people are underplaying how important office is. And if we look at the actual trends of what's going on, what do companies want? They want to get their employees back in the office. And how do you do that when their homes are so comfortable, especially in the cold winter months? You make the office a damn good place to be, a fun place to be where you can see your friends, go to the gym, have a great coffee, and maybe dine with some of your friends on site. And Vornado has done a really, really great job at this, but they're not the only ones who understand the concept. And this is reflected in the data. According to CoStar and Colliers, in 2025, about 41 million square feet of office space was leased. This was only surpassed in 2019, which means there is a sharp demand for office. And according to Avis and Young, about a little bit over half of that square footage went to Class A trophy office buildings. So, office, especially the high end office, is actually in very high demand and will only continue to grow as companies want their executives, but also their junior staffers back in the office. So, office is going to boom even bigger than residential conversions. Retail sales are going to reach all-time highs. Tourism in 2025 invited 64 million tourists into New York City. That is a huge number, but it was topped in 2019 by 66.5 million tourists. Um, so I think in 2026, we're going to see that number actually be surpassed. New York City is, in all intents and purposes, the cultural capital of the world, and it certainly has, some of the best aspects of American culture on display in the most compressed surface area available because of how dense New York City is. People love New York, and they're going to keep loving it. And actually, in the last 6 years, ever since 2019, retail sales taxes in New York City have increased about 32%, which is remarkable and showcases the strength of the consumerism happening in the city. In 2026, I think that tax number goes up, that tourism number goes up, and what does that mean for people who own that real estate? Well, it means lease renegotiations should go very well, um, and owners should be doing very well. Finally, let's talk about land. I think residential land pricing and residential land is important to discuss. New York City multifamily real estate was decimated in many respects by the 2019 package of rent regulations. Values came down significantly, and this removed a lot of the value add possibilities in the residential market. Buildings could no longer be sort of turned around the same way that they used to be. A lot of buildings can't, at least now, because 45% of the housing stock is subject to rent stabilization in New York, and now the remaining, give or take 50 to 55%, is subject to good cause eviction, with some exceptions. So opportunistic investing in multifamily in New York is still available, but it's much more challenging, much more nuanced. Out of that change, what happens? Well, you build something, you set the rents at whatever level you want, and then you refinance it based off of the rents that you get, you recapitalize it, or you sell it. And you sell it at a nice margin to the price it costs you to build it. So land is going to see a lot of investment dollars in New York City for years to come. Um, However, developers need to be very, very discerning on what that looks like. The current tax abatement in place, 485X, heavily benefits the development of 99 unit buildings. The program offers 20%. Uh, it requires developers to have 20% of their units be within certain AMI levels, area median income, so 20% affordable. And in exchange, it basically abates the property taxes. However, if developers elect to go beyond 99 units, they face steep wage requirements for their labor. So there's a big bias towards 99 unit buildings or less. But since fixed costs for these developments are fairly similar for a 50 unit building to a 99 unit building, developers are going to make way more efficient investing and development decisions by building 99 unit buildings. What does that mean for land? It means land that is zoned and sized appropriately for 99 units is going to get the highest price per buildable square footage. That means land that can fit 99 units, and land that can fit 198 units, and land that can fit three 99 unit buildings, right? One, two, three. For land that's in between, for land that can maybe do 130 units based off of the zoning floor area available, well, developers are just not going to extend the same price per buildable across the buildable square footage because they can't use all the buildable square footage. So pricing will be price per buildable will not be so good a heuristic for some of these sites. Brokers, developers, architects, anybody looking at these will need to understand um, um, the 45X tax abatement program. Otherwise, pricing just won't make sense. To make things even more murky, the affordable developers are also going to take interest in building, especially under Mamdani, where he is going to work to make affordable housing development a priority. And since New York City passed a wave of reforms, um, ballot proposals to make affordable housing development easier. So that's going to come, and those developers sometimes they focus on certain areas in qualified census tracts, for example, and that's going to allow them to build more than private developers in some cases, and they're going to get more funding for those from agencies like HPD. That's going to enable them to pay more money, which is going to make a site that could be across the street from another one, priced very differently. So development site pricing in 2026, I think is going to be all over the place, and investors, developers, brokers, everybody in the ecosystem is going to need to take a really, really discerning eye. Um, those are my predictions for 2026. Please let me know where you agree, disagree, or have comments. Please let me know. I'm pretty optimistic about New York in general. The gross city product is higher than it was pre-COVID. Subway ridership is getting really close to back to pre-COVID levels, with some subway stations across the city having up to 90% pre-COVID levels, especially in the midtown business districts. And look, crucially, New York remains a magnet for young talent and industries. Um, there are about twice as many folks who come here than San Francisco. So this is really where things are happening, and I think folks who own the real estate in a city where there's so much of an economic engine will do very well. Thanks very much, and take care. And you can reach out to me if you'd like in the links below, or you can email me at rs at Sinclair, Sinclair, Realty, Realty, co.com, or call me at the number below. Thank you. Take care.